G'day everyone, welcome back to another quick Cotality market update. We discuss and digest the latest figures for the results ending 31st January 2026. First chart here, or first graph I'd like to look at is this table at the bottom of the page, just for a quick snapshot of the month-to-month growth for every state that ends in 31st January 2026. So we see Sydney and Melbourne both flat markets at this moment. 0.2% growth in Sydney, 0.1% growth in Melbourne, indicating both markets are very flat. Sydney, probably the affordability is quite stretched now with the demographic, and Melbourne, there is still some poor sentiment around capital of Melbourne with government intervention and not so friendly policies towards property investors, and that's going to take a bit of time to change, maybe with a government change and the elections coming up. Brisbane, Adelaide, Perth continuing to motor ahead. 1.6% growth in Brisbane for the month of January. 1.2% growth for Adelaide, and Perth, standout capital city yet again, recording a strong 2% growth for the month ending 31st of January. Now guys, if we annualize Perth's growth, or even Perth, Brisbane and Adelaide, you're looking at circa 17 to 24% growth for 2026. So that's another strong year of performance there, underpinned by some major undersupply, especially in Perth, and Brisbane and Adelaide as well, continuing to motor along. Hobart, 0.5% starting to make its run, and Darwin at 1.5% growth in January. So for the quarter, again, Sydney and Melbourne have been rather poor, with Perth, Brisbane and Adelaide leading the charge as well. Perth, 7% growth in the last quarter. That's incredible. Again, annualize that, guys. That's about 28% growth for the year if growth continues on that trajectory as well. Something quite interesting at the bottom here as well, we see the combined capitals and combined regionals. Now, combined capitals in January grew 0.7% across the board, and the combined regionals grew 1%, outshining and outgrowing their capital counterparts. And we see that in many areas around Australia, especially in regional Victoria, regional Tasmania, regional WA, and regional Brisbane and Adelaide. The next couple of graphs I'd like to look at is the rolling 3-month change in dwelling values. That touches on a similar story. Perth at 7%, Brisbane and Adelaide rounding out the top three there. So we can see the growth is starting to increase again, ending January 2026. And the rolling 3-month change in dwelling values for combined capitals versus combined regionals. Again, we see the combined regionals outperforming the combined capitals. So pretty good if you've purchased recently in a large regional area, regional Victoria or regional Tasmania or WA, you would have seen some good growth there. And this graph here at the bottom, this table at the bottom, also captures the percentages that we've been touching on: the month, the 3 months, and the 12 months. So for the regionals, again, Tassie doing pretty well, 1.3% growth. Man, if you even annualize that, that's a good 14-15% growth for this year. Regional WA, 1.9%. Regional South Australia, 2.1% growth in this past month alone. Now, a lot of people have written Adelaide off, and I might make a video later on touching on Adelaide and why it still continues to perform, especially the regional aspect of Adelaide. And regional Queensland, 1.1% growth. A little bit of steam coming out of that market as affordability starts to get stretched, but still a strong growth there, with regional Vic and regional New South Wales both at 0.7%. And I anticipate regional Victoria will start to take off in the next few months as the data does lag. Just remember that, guys, when you do look at these sort of graphs. Capitals, similar story to the figures that we touched on before. Some good growth there over the past month, 3 months and 12 months for the mid-sized capitals. And we will see the regionals play a predominant role in 2026, in my opinion. Last little snapshot I'd like to look at is the annual change in rents for both houses and units, and we see that Darwin rents for houses has gone up the most, 7.1%, ending January 2026. Rather surprising to see Hobart at 6.8% rental growth. Now, Hobart does have the tightest vacancy rate, which would definitely be contributing to the higher rental growth. Obviously, there is a lack of rental stock on the market. There are people coming into the area. There is more pressure on rental stock, and that's what pushes prices up. And we see in the rental changes for the units, again, similar story. Darwin, Hobart taking out top two. Rather surprising to see Adelaide The rents have changed the least in Adelaide, only growing 2.5%, and that is a contributing factor of the affordability being stretched. House prices, unit prices increasing, rents aren't able to keep up, and we see the yield really start to compress as we cast our eyes here to this last graph. So no surprise to see that the yields in the regional areas are doing better than the capital cities, but still we will see that compress as house prices increase dramatically and quickly. Yields and rents obviously can't keep up, therefore compressing the yield. So we're still seeing, with the exception of Darwin, regional and capital city at 8.1 and 6%. We see all the other regional areas in the fours. 1.5, which is regional WA, still doing very well, and the capital cities, guys, they have taken a big hit with the yields now. Hobart 4.3%, and everything else in the threes. Something that you really need to pay attention to, and from a broker's lens, you need to be careful of purchasing properties with very low yield, because they will drain your cash flow and they will make it harder for you to continue to accumulate property. So guys, I hope you enjoyed this little bit of a market snapshot, market update. I like to do these little bite-sized videos just for a quick update. Let me know if there is anywhere you'd like a bit of a deep dive in, and we can really focus in on that, and we will make that sort of content out there. Till the next video, take care.